Think about if you have $1 million at the end of 30 years, and then you can only take 4% every year, you're talking about, what is that, $40,000? And if you have it in a traditional retirement account, you're going to have to pay taxes. It might actually be $36,000 a year. That doesn't sound like a lot of income per year when you are retired. We get all excited about it, but that's not what we have. So with this strategy, the idea is that we create 2 to 3 times more than that. Hopefully, instead of 4%, we're trying to get to maybe 6, 7 at least, potentially, to help on that, and even more, right? And even more.
Welcome to the Limitless Enterprise Podcast. Hi, everyone. This is Zico Fernandez. I'm the founder of Limitless Era, where we help people and companies grow and run efficiently with AI. This is Limitless Enterprise, the podcast which tries to interview leaders in the industry and see how they are adjusting and growing in the current world. How are they keeping their companies limitless in this day and age? Today, I have Edison Cardenas. He is the CEO of MPI, and I'm actually a customer for a few years, and it was nice to connect with him. And he was so gracious to give us time to have this discussion, to have a brainstorming, and maybe some things that you guys can learn. So with that, I'll just let Edison introduce himself. Edison, why don't you go and tell me about yourself?
Yeah, absolutely. Thank you, Zico. Thank you, and appreciate the invite. I'm looking forward to our conversation. MPI Unlimited, I'm the CEO of MPI Unlimited. I started here about 4.5 years ago. And one of the reasons I started here is because of the strategy that our founder, Curtis Ray, created. And I just found it that it was something, it's a breakthrough strategy that he created, and it took him years. It wasn't just easy to go. So when I saw that story, about what he created, I thought, hey, let me jump on this. A little bit about myself. I've been in the financial industry a little bit over 20 years. Before that, I used to own my company for about 10, 12 years. I was in the hospitality industry. Then I sold that. And then I decided to come back into the finance industry. I have worked for big corporate financial companies like Schwab, Prudential, Vanguard, and also small companies that focus on alternative investments. I've always been attracted to alternative investments using your IRA. So some people call it self-directed IRA. So I work in that industry too as well. And I also found it fascinating. I use those alternative investments to invest money with my IRA. So like I mentioned, I've been in the industry for a while. When I came to the company here at MPI, I started on the sales side of things, and then I look over marketing for a little bit too as well. And then I was looking into the operations side of things. And then finally, Curtis, the founder, he said, I need to build more that will create synergy with the company. And so he decided, hey, you take the lead here and let me go and build other entities that will help us grow even bigger. So what's our mission is really, like I tell people this, I'm very passionate about the strategy because it's groundbreaking, but also I apply it, right? So I believe in it, I understand it, and we use a life insurance policy for doing that. But I didn't come here because I wanted to sell life insurance. I came here because of the strategy he created using the life insurance policy. And I know we'll get probably a little bit more into that, but
yes, of course.
That's really my passion, what I'm here. The reason I came here now almost 5 years ago.
Okay, why don't we go into that strategy now? I myself also, to just tell the audience, I also discovered the strategy through a book that one of my friends sent me. I stayed up all night reading the book in one sitting. I could not put it down. It was a PDF, The Compound Investing, and I found it so good. Next day, I made a call and talked to Rob. I think it was on your
Rob,
side, right? Rob Dewey. I think, yeah, I had a chat with him, and at the time, the numbers of customers, I don't know, it was still less than 1,000 that you guys had, but y'all had good track record at that time. And I
right.
looked at the numbers and everything, and I was a believer, right? I
Mhm.
like what you guys were doing. So I won't keep the audience hanging. Why don't you tell us what is the strategy about? It's not life insurance. It's an investment strategy packaged into a life insurance. And why is this better than anything else, right? Maybe And the thing is, when people talk about these type of strategies, it's very difficult to understand. So if you can tease it down through examples, that will be easy for
Yeah,
people. It is not an easy thing to understand. Yeah, I had to read the book to make sense of it. But maybe maybe you have practice in being in sales and marketing, or you have to make it a little easy for people to
yeah.
understand.
Absolutely. And like you said, life insurance can be a little bit complex, right? And when the word even life insurance comes into mind, it's almost like people are uncertain about it, right? And some even people have made it a bad rep about it. And that's difficult sometimes to come through. Life insurance, like everybody else, and I'll tell a little bit, even from my side of things, as my story when I came here. Like I said, I didn't want to just sell life insurance. Life insurance, most people know this, like I did. Even though I've been in the financial world, for me, life insurance was simply, hey, I'll buy enough life insurance that in case I pass away, I live it to my spouse. Something stays to my spouse or my kids, and that's all I knew. That's really, what I think the majority of people understand. But then I started reading a little bit more about index universal life insurance, IULs. And I understand that it's the same thing. So, okay, so I had life insurance. Well, it's not the same thing like when I was in corporate, right? Because that's group life insurance. Once you're out of there, you don't have any life insurance
Yeah.
anymore. When you buy index universal life insurance, it's a permanent life insurance, which is very different than term as well, term insurance. So a lot of people buy into the term insurance, which is great, but just understand that once the term comes to the end, that's why it's called a term insurance, you don't keep anything. Right? It's gone. On the other side, with permanent life insurance, you keep it with you forever until you pass away. Now, the good news about life insurance, not only do you have the life insurance or the death benefit, what it's called, but you also have the opportunity to create what's called cash value inside the life insurance. So that's really the high level of it. Now, I like to talk about buckets. And by the way, the IUL, we didn't create that. And what I'm about to explain is just two buckets. And this is really what the IUL or the Index Universal Life Insurance is in a very high level made up. On the bucket one, you have three things that go into bucket one. It's the cash value, right? So it's your contributions, your monthly contributions. That's where the growth of your monthly contributions happen. Okay, so that's the second thing inside that bucket. Then the third thing, that's where the protection, what we call the 0% floor, as well happens. So all of that is in bucket one. Then bucket two, what's called the index participating loan. Okay, that's another feature that the policy already has, where you can actually go and you can do like a dollar for dollar loan out of the policy based on the cash values that you have. So if you have $10,000 in bucket one, technically you're able to take out $10,000 from bucket two, and you can do whatever you want with it. They don't check your credit. They don't do any of that because their safety net, their collateral is your cash value, right? So that's why you're able to take technically dollar for dollar as a loan from the policy. So that's really what the policy is all about. That's really what the IUL has been in existence for many years. So that's not what we created. Now, what Curtis created, the founder, he came and did a lot of numbers, and there's a whole big story in one of the books that you talk about. He has two books, The Lost Science of Compound
Yeah,
Interest
that's the one I
or
read.
Everyone Ends Up Poor, right? Um, And I'll tell in a minute how your audience can get that book too as well. On bucket two, you're able to take that loan, right, and do whatever you want with it. Where MPI, the strategy comes into place, where w- Curtis had to build all the numbers, work with the actuaries,
Yeah.
and have the insurance company buy into it because we are not able to do that without the insurance carrier, the insurance company approving it, right? And what he was able to do, it took him about 4 years, maybe a little bit more to even get there, is instead of the loan going out to do whatever you want with it, you actually put the loan back into bucket one.
Hmm.
That's the strategy. And that's really what we're able to do. And what that does is that you're able to apply that as premium into the policy.
So this is
Okay,
like
so
additional premium.
exactly, exactly. So let me now put this together in numbers, right? Let's say that in bucket one, all your contributions add up to $10,000. And let's just be conservative that it's making the growth that I talk about on bucket one is making about 7%, right? So you're making 7% on that $10,000. That's bucket one. When you do the strategy and you move the loan back into bucket one, now you have $10,000 that's yours making 7%, and now you have that loan making 7% inside of that. Question is, well, don't I have to pay the loan? Yes. Right now it's at 5%. So if you're making 7% on that $10,000 loan, minus the 5% that costs you, you're making about a 2 to 3% on that. And so you're making 7% and using other people's money, so in this case, the insurance carrier's
Insurance
money,
company money.
into that bucket, at 2 to 3%, now you're making 9 to 10% on that. And that's really the magic about it. And you can't do anything anywhere else that. You have to get it approved by the insurance carrier, and that's what the exclusivity, almost the exclusivity is with us, that we're able to do that.
Okay. And one of the things what I was also thinking is, so net, instead of getting 7, you're getting 9. But
Exactly.
the tricky part over here is there's also a restriction. Yeah, you don't want to be a mech, right? If you're putting in more money, so you have to keep on increasing the life benefit,
The life benefit, exactly. So
and
you
that's
have
why you
to.
need the approval from the insurance company, so
Exactly,
you
and
can
one
do
of
that.
the very important things that I want to mention is that we have to max insure it. So one of the big things is that we don't want you to get the most life insurance possible. That's not the purpose of what we do. We actually is the opposite.
Least.
The less amount of life insurance, because also your expenses will go down that way. The whole purpose of this is try to create 2 to 3 times more potential income in the future, whether you use it for retirement purposes, which is what the original part of it, and now whether you use it for investment purposes or whatever you want to do, right?
Okay.
And that's the beauty about it too as well.
Okay, now why don't you bring the story home? So if people earn more money right now by
Mhm.
using the strategy and putting it into the policy, so that life, so the cash value grows faster because the interest, I mean, the net interest rates that you earn are higher. What happens to at the end of 30 years, right? So what's the projection? Can you maybe, if you talk about that, people will be able to relate. Yes, it's the same money eventually, but you're not keeping it under a blanket, right?
Right,
You are using that money. You're not.
right.
It's like, would you just keep $100,000 at home under your blanket for 1 year, for 30 years? That's not right. But here, whatever money you have, wherever it is, you're using it to grow your own money. So that those are all good practices that come in. But where does this take you at the end of 20, 30 years? Could you just speak towards this versus not this, and where does it go?
Yeah, very good. So compounding interest, that's the beauty about it. It's compounding. We always like to talk about that curve, right? We start right here at the bottom of the curve, and then the money start making money for you inside the policy. The beauty about having the cash value and that there's growth within that bucket one I was talking about is that it compounds year over year over year. Let's talk about 30 years, right? So it's just going to keep on compounding, that the more you contribute, but also we're going to be able to do the strategy, the more compounding power you're going to have. And of course, the power of compounding also comes with the factor of timing, right? The more time you give it, the more growth the potential growth that there's gonna be in there. And that's the beauty about it. And the idea of getting to the 30 years, right? Like in my case, I have the policy. I projected that for me to be in 25 years. I want to go use that as a complement or a supplement to my other income that I'm going to be receiving, whether it's Social Security or other retirement accounts. That's what I want to use it for. Now, in the meantime, I'm also using the policy to create some other investments as well, which I know we'll get into that here in
Yeah.
just a few minutes. But really, the goal for me, the goal when you came, right, was, hey, I can use this policy when I retire. I can have this amount of income, and even better than what um, other traditional retirement accounts can do. Because one of the things that I learned being on the financial field is what they call the 4% rule, right? And typically, when you retire, that's why they talk about sometimes you got to downsize, right? And the idea when retirement comes is that you actually continue your lifestyle, right? But when you use the 4% rule, so think about if you have $1 million at the end of 30 years, and then you can only take 4% every year, you're talking about, what is that, $40,000? And if you have it in a traditional retirement account, you're going to have to pay taxes at that time, right? Whatever your tax bracket is. So it might actually be $36,000 a year. That doesn't sound like a lot of income per year when you are retired or when you have $1 million, right? We get all excited about it, but that's not what we have. So with this strategy, the idea is that we create 2 to 3 times more than that, like what we're talking about right now. And hopefully, instead of 4%, we're trying to get to maybe 6, 7 at least, potentially, to help on that, and even more, right? And even
Yeah.
more.
Yeah. So you can, so the end goal is, instead of, if you had invested into S&P, that is a 4% rule that applies to you. But if you invest the same money here, there is a calculation, and you guys have it, where you can withdraw, 7, 10, maybe even higher percentages, because the money keeps on compounding better, and it works out, and it still grows even though you're taking huge chunks of it.
Exactly. And it's tax free,
Yeah. That's another thing
which
which
is
is
the
not
other
there.
beauty about it. Yes.
Yeah, which is not there over there. Yeah, that's another thing of it. So effectively, that itself adds another, depending on your bracket, that will add another 20 to 30% more, at least, maybe even.
Yes.
Right.
Absolutely.
So that's
Absolutely.
that's more in your pocket. Okay,
Mhm.
cool. Talk to me about the customers that you have. Right, what type of people have come up here? Because I myself, when I made this thing, I always thought, like you said in the beginning, when you said life insurance, I had this, I don't know, I had this aversion to it. I only knew it about term. But when I got educated to the books and to other things, I really found the power, learned the power of it. And then the book really helped. So talk to me about, who are the customers? It's definitely education that's needed over there. But it seemed like the ones who want to build legacy, thinking about the future, thinking about their retirement, this is an avenue. Maybe talk to me about the different customers that you have that have come to you for this, and what are they using the policy for? You said investments also.
Mhm.
You have
Yeah,
retirement also. Maybe talk to me about who are your personas over there. Who's the
absolutely.
site from?
So talking about education, we talk about the books a couple of times. I'll just post a QR code right now where people can go and provide, they can take their phone and get the books for free, or they can, you probably remember this, they can text the word book to 20500, to the number 20500, and they can actually get the book for those 2 books for free. Like you said, you got it on PDF. So first thing we like to do, we're all about educating, just like what you're doing right now with your audience, right? It's all about education, and we offer the opportunity for people. We actually are very big believers that read the book first. Make sure you get a good understanding, and then let's have a conversation. People, we have the personas, right? There's people who want to have an alternative side of investment, right? Whether, hey, I know about traditional investment, but I want to do something different, something else. What else is out there? That's me. That's the person I am. I've always been outside the box thinker. Actually, even part of my story, one of the reasons I worked for Schwab was back in the day, Chuck created the platform, or was one of the pioneers with the platform that gave access to people to invest,
Yeah,
online, right? That's what happened back in the 90s. Then Vanguard, where I work, right, they are the pioneers of the index fund,
yeah,
right? And Mr. Bogle just did an amazing job with that. And now I'm here with this strategy that I believe was, just like I said, I'm using it as an alternative to my other retirement income accounts that I'll use in the future, right? Whether it's those retirement accounts or I have real estate investments that are going to create that income for me as well. So this is for people who want to think outside the box and also want to see what else is there. The other persona I would say is for people who are actually focused on that retirement income. Nowadays, with the internet and the access that we have to so much education, now a lot of people are very well known that the traditional retirement is good, but it's not enough.
Yeah.
So they say, hey, what else can I do so I can create more income from when I retire? Right? So people are getting that education. Another persona is those who are on the investment side of things, right? They want to use, excuse me, they use what's called infinite banking, right? And that's not a concept that we created. That's actually was created back in the 80s. But we use our strategy to even compound even more so people can have more accessibility later on to be able to do investments. For example, I'm one of them. I currently use my policy to make some investments. Actually, I opened my policy here 3 years ago, and now I was able last year to take out money out of it, the loan, and be able to go invest outside of that. So that persona like me is those investors. It could be in real estate investment. We have a client actually who is into the car world. He actually buys luxury cars, $100,000, $200,000 car. Even right now, the Barrett Jackson show, the big one was happening here in Scottsdale. And they go there and they use those funds to buy those cars. And hopefully within the year, they are able to resell it and make some money with that. And then they put the money back into the policy. So that's also other types of investors, that they use it for cars, right?
Yeah.
I use it for real estate. I've used it to loan money out. So I loaned the money and I got my interest paid back in 3 months, right? So usually those guys who do fix and flips, right, in the real estate world. So those are the personas that we're doing. Now, another persona is those that say, man, I'm late to the game, right? And maybe I'm 59, 60. And we try not to go above 60 with people to get into this strategy. But, for example, we had yesterday a webinar and somebody on the webinar was saying, hey, I'm 65. What can I do, right? And what we can do, actually, this is where you create your wealth legacy.
Yeah.
Right? And what they can do, actually, they can work with their kids or their grandkids to open policies for them. They can stay as the owners, right? But
but they can fund it.
Exactly. They can fund it, but they can also use that policies even to build more cash value, do some investments if they want. And they also can put that inside a trust specifically that will help them keep that legacy going. So that's the other persona also as well, that we have people here that have a lot of their policies for their kids or grandkids.
Yeah. Yeah, I think that what you're basically saying over there is the Rockefeller method, right? That's why their wealth still exists right now, and they do it via whole life policies.
Absolutely.
Yeah, so that's neat. I didn't think about that persona, so that's nice to know. One question, just to tease in a little bit more about the investor angle, because most of the folks over here are interested in alternative investments. And so the question over there is, how does one do that alternative investment? You just take the money out and within a year you have to put it in. And how much do you put in? So suppose you take $10,000 out, you have to pay 5% on that. 5% of 10 is, let's say, it's 500, right? Is it 500? Yeah, probably. So you have to pay after a year, you have to pay around 500, and you're making, let's say, I'll just round it up, you're making 10% on the money. So you're getting net 500 more. So do you put all that money with the interest inside, or you keep some of the interest yourself? How
So
is that
whatever I
working?
make, I keep. Whatever
Okay.
I make, I keep. Right. And the loan, I just put it back. Whatever I make, I can also put it back into the
Yeah.
policy. But like you said almost at the beginning, right, we also need to make sure that the numbers are right. And
Yeah.
So you don't mech the policy, right? You don't
Mech,
want to
yeah.
be putting too much into
Yes.
it, and we don't want to do that. So to your question, what you usually do is we recommend to try not to take more than 60. Let me think.
80.
Leave 60%. No, I'm sorry. Leave 40%.
Okay.
Some people are a little bit more aggressive. They go down to 30.
Mm-hmm.
25, but I like to just play it safe. I'm conservative in that scenario. And depending on the numbers, it can tell you how much you're able to put back. But the
Okay.
reason why I want to put it back in 12 months, here's the big reason, and this is the beauty about this. Remember I said in bucket 1, that's your contributions. Bucket 2, this is the loan,
Loan.
right? And then bucket 2, you can move it into bucket 1.
Mm-hmm.
So every year, after 2 years, that's what we recommend. Every year after 2 years, I'm able to go do that movement of the loan back into the policy. So when I take the money out, the reason I want to put it before that year ends is because let's say I have $10,000 I pull out, and now I have here that I'm able to pull 20,000, right? No, I'm sorry. I have the 10,000.
Mm-hmm.
It moves over this way before the year comes in, and now instead of me just having a loan for, let's just say an example of 20,000, well, I'm able to do 40,000.
Okay. You can pull out more money. That's why you
I
want to
can
put
pull
that
out
in.
more money for next year. Exactly.
Yeah.
Instead of me just pulling, like I said, $20,000, if I put that money back, now it's going to back into the policy. Now I'm going to have more available loan for me
Yeah.
to take that money out and be able to invest it outside.
Okay. And is there a restriction on why that eligibility is every 2 years to withdraw and put it in, or can it be
I'm
any time?
sorry?
You said it's 2 years. You have to every 2 years you can take the money and put it back in. It does
So
it have to be 2 years
every
or
year after 2 years,
every year after? Okay.
after your first 2 years. So why the first 2 years typically? Depends again on the numbers. You might be able to put more. Every after that, the first 2 years is very important because that's when you give the time for the policy to grow.
Mm-hmm.
Right? That's when you give the time for the policy to build up. Right? That's why you want to give that time for that. Once the policy is there in around 2 years, that's when we're able to do the strategy, the loan, but also that's where potentially you mentioned this very important. I can increase
Yeah.
the death benefit,
That
right?
benefit and you can put more money in.
Exactly,
And
exactly, and
that's what compounds also.
exactly, exactly. That's the beauty of it.
Yeah. For those people who need to listen to this more, I think what I need to do is create some sort of an animated thing. If you guys don't already have it, I'll figure out if I can do it. It'll be nice to figure that out, to do some visualization or animation and a short video like that to
Hmm.
explain this. So let me figure that out. But I also truly believe in this, and I enjoy. I'm a customer. I've not used it for investments, but I want to figure out those things and do that investments. And I'm glad you told me, because one of the things I didn't know is I was hitting the max ceiling, and what I have to do is I have to do my underwriting again, right? So if you want to increase it every 2 years, you have to do your underwriting again, so you can put that additional money. So they let you
Right,
do that also. So that is the
right.
process that I have not gone through. We did it only once, but that is another process, right? So, but even then, I think the goal is still the same. I think that makes sense. Cool. Talk to me about, are you guys the only ones who are doing it this way? Have other people kept up with it? Because everyone else is still setting different or traditional, I'll say traditional or the old strategies, right? Not
Hmm.
looking at it from an income point of view. You're really talking about income and growth. That's what it
Right.
is. And others also are talking income and growth, but not compounded income and growth like what you all do, which is
Right.
even better. Right? So,
Exactly. I think one of the things you mentioned two things there. One of the things that, like I said, that people are getting more educated is that everybody wants to get to $1 million. Everybody. That's called accumulation. And that's all we think about it. That's all we have been thinking for years. And many people still think that way.
mhm,
I want to get to the 1 million. What they don't think is what kind of income am I going to have with that $1 million? And that's the question, right? That's the key part of it. It doesn't matter if I have $1 million if all of a sudden I cannot live the same lifestyle that I was living before I was retired.
yeah.
right? So people need to think a lot more when it comes from, okay, what's going to be my income? And there's calculators that you can find, on the internet. But it's very important that they start thinking that way, not only the accumulation, but what kind of income am I going to receive from that accumulation of money, whether it's $1 million or what typically the average right now, I don't know if you know this, but it's a $250,000 when
Yeah.
people retire,
For people who
that they
retire.
have that kind of saving, right? Well, that's not enough. One of the things is to focus on the idea of um, producing that income, right? And that's where the MPI strategy, we believe, can help people try to create that 2 to 3% potentially more income in the future by doing this. And there's different ways of doing it. Like you did, you got educated yourself, and then you had a consultation, right, with one of our agents, with Rob, like you mentioned. So the other part that I would say that you mentioned is very important is that you get yourself educated.
Hmm.
It is so key that we talk to people about that, because life insurance is not an easy thing, and that's why even the people that work with us, we actually make sure that they get educated. They even have to take an exam. Everybody, including the person who's managing this behind the scenes here in the studio, right? He needs to understand. He needs to really believe in it too as well. But the understanding and making sense of it and how that can apply to your life, that's so important for us when we work with people, making sure that they get educated really well.
Yeah. Also, another thing is people. This is like two things you mentioned there. One is $1 million don't bring you enough. Your standard of living matters, and you should really switch your mindset to deciding on how much income you want. So
Mhm.
then come up with what that number is and back that up into a 4 or 7% or higher, depending on the strategy that you're following. So income is what's really important. That is something you feel in your everyday. Just having $1 million in your bank doesn't get you anything really. It's
Mhm.
just probably feel good factor, but that's not gonna. If that's not enough, if you're spending more than 100,000 a year, that's
Yeah.
definitely not gonna be good, right? So you need
Yeah.
to
Yeah.
really look at it as income. And another thing that you also mentioned was you need to be educated. So it's not easy to be educated in life insurance. It will take a little time. Like people know how to buy stocks. People did that, right? People understand S&P. There are a lot of people. There's probably 10 times more people thinking stocks and equity versus this thing, and even
Mhm.
thinking income in this must be even less in life insurance. So
Mhm.
n- n- and that's what it was. I got educated and I said, this is good. I'll take a portfolio strategy. While I'll have money there, I know this will be my foundation. I treated this as a foundation, really, right? And there's also BYOB that you can bring beyond bank. So
Mhm.
I know these are all reasons. So that's another thing. You need to spend time educating yourself.
Mhm.
And it's just like you normally have employees who you want to be totally bought into your product or bought into this thing. You also need your customers to be well educated. They just because it takes time. You need to mature. It is supposed to be boring at times, right? So it just
It
strategy.
is boring. It is boring. And I tell that people, because one of the other common question, you hit something very important that I would like to mention, is compounding is boring.
It's like
It
watching
is.
paint dry.
Yeah, because think about it. If the curve starts here and I wanted to go here, people try to get it up here right away, right? Compounding it is slow and steady. Our founder Curtis likes to call it slow and steady wins the race, right? Slow and steady, consistent, disciplined, in your contributions, in your savings, right? It is very important, that part of it, because compounding takes time. And that's one of the factors important about compounding. And that's what it takes time with this strategy as well. One of the most common questions in the financial field that I've been in is, what's going to be the return? How much am I going to make? Hey, it's a legitimate question. Don't get me wrong, right? It's very good. But in our case here with the MPI strategy, it's not just about the return, it's about the steady consistency, discipline of making the contributions, but also saving that money, but also letting it grow. You
Mhm.
know, it's just we gotta let it grow, take it time, because that's very important. And we all are, including myself, guilty of, hey, what's the return? How much can I make? Can I make this in 12 months? You know, no, it doesn't work that way.
Yeah. I was wondering, some things are going through my mind on what kind of objections people have and how do we answer something like that. But, I'll give it some thought another time. I'm just thinking about ideas here.
Hmm.
Let's go into any trends that you're seeing in this industry with people coming in. Do you see more people coming in now? Then what's happening over there for you?
Yeah, absolutely. No, more people. Let me put it this way: we continue to find that more people don't know what they don't know, and I think the biggest challenge has been how to get people to be a little bit more open-minded of the possibilities that are out there, right? I also experienced that when I worked for a company that did alternative investments using their IRAs, right? They couldn't believe that you're actually able to use your IRA to go buy real estate. Or in my case, which I'm very happy right now, I went and bought precious metals, right? I bought gold, I bought silver. They're doing fantastic.
Yeah.
But I was able to do that because I was open minded about, hey, there's something else out there versus what we are almost very well educated about what the traditional retirement investments are out there. So because of that, I open my mind and I say, hey, there gotta be something. And then you open your mind and you find things like in real estate too as well, which a lot of people know, but there's also now very different things that you can do within the real estate community. I think that's the challenge and that's why we believe in education. We totally believe in education. It's not. I think that's where really the dots come together, and it makes sense for people why this is also another way of looking for your financial future.
Yeah, it would be easy. I think what really helps here is you need to look at investors. Investors is the mindset to do these. They'll understand this a lot more better because they look at, net additional income that you could earn and what does it bring in the long term. So I think that's a good segment of population. Real estate investors definitely understand this a lot more. That's a good population of people over there. And but telling others, there's more stories over there. But I understand completely. I can see, I believe in this product, so I know what it takes. And even my journey was quick only because of the book, and I was open minded, and I did a lot of research, sleepless nights. Once break the chasm and you're on the other side, it's like, your whole worldview shakes, and then after
Yeah,
you have to explore this thing. So I went through that myself, so everybody
yeah.
needs to go through it themselves. I know you are running out of time and you have to head out, but what I wanted to quickly wrap it up with is, can you tell me what are the biggest challenges for you in the company right now, right? Can you talk to me about what are your challenges to grow or scale, and what are you focused on?
For me, the most important part of a company from the growth of the company is having the right people in place. That's for me, it's in a daily thinking. I think a lot about our people, how we're doing, how we're enjoying our job, how we are applying the things that we are getting trained on, how are we following up the systems that we have in place, processes that we have in place, and making sure that people are well trained on that. So for me, the first part of the company is to make sure we have the right people, the right team in place. And I'm very proud of the people that we have in place right now. That's a big thing. Big fan of making sure that people know why they are coming to work.
Okay.
Like I mentioned from the beginning, I am very passionate about this because I found something that is breakthrough,
Yeah,
an alternative side of things. And I'm very passionate. That's the reason I wake up and my motivation is how can I bring this to more people? How
that's
can
good.
people know and learn more about this? And that's really my mission. How can I bring, hey, did you know? Hey, by the way, I was in the financial field for years. I didn't know this existed. And I
Yeah.
found that out. Same thing when I found out about alternative investments using your IRAs, right? I didn't know that. And guess what? I found it and I was very passionate about that. But now I'm here and I'm very passionate about this strategy that you're able to apply with life insurance, which, by the way, I didn't talk about all the other features and benefits, right? You already get life insurance. You even get um,
All those other things.
all the other things, right, that you can get into it. But that's really my main focus to be able to scale, is to have the right people in place. The second part that I kind of mentioned in that, it would be our systems and processes,
Yeah.
and I believe in technology a lot. I think I kind of mentioned off
Yeah.
camera the other day, right, that I like to play a little bit with technology myself and try to see what else is out there that I can talk. And I know that you're very fan of that tech world,
Yeah.
and even I was very impressed how we connected.
Yeah.
Just to look at those other ways that we can make the company more effective, that's something that
Yeah.
I look for also
Yeah.
as well. So our systems, our processes, and also the technology side of things.
Yeah. What I'll only leave you with is, the reason why I'm passionate about what I do is I work for enterprises all my life, and there are teams of people building solutions for enterprises, but enterprises earn so much money that they can afford a team of people. That same level of you know execution, the same level of capability now is available to the masses. And
Hmm.
so that same complex system, same capability, same benefits that enterprises had where they could grow and scale is available to the to masses. That cost of building a product has come down a lot. You can do it a lot quickly and all. So that's what I'm passionate about. It's more about helping Main Street, right? Because that's the life and blood of the world. And the thing is, you see with all these disruption happening everywhere, people will have to do more, will have to depend on themselves. So I'm focused on this because I'm focusing on helping the small guys,
Hmm.
because that is the right thing for the world, for the country.
Hmm.
You need to have enough, because that's those are the guys who earn money and spend money to help the economy to take care of the family, right? And there'll be a lot of that also, I think, from the disruption coming ahead. So I feel my passion comes from helping those, I wouldn't say underprivileged, I'll say those guys who are small and want to grow and really challenge the big players, right? Because I think those benefits exist everywhere right now, and there's no reason why we should not take advantage of it.
100% agree. 100% agree. Yeah, definitely. That's the the people that we're looking for, right? To help those who don't know what they don't know, and not only the wealthy should know it, right? But all the masses should be able to do that.
Yeah, and just giving another little example there, it's like when we did a certain implementation in one system, like at USAA, there were like 300 plus 350 people working on that product, an IT system. So you can see, and that's supposed to be just 20 or 30% of who works in those areas. So you
Hmm.
can look at the scale that they operated and how much they can spend on tech, right?
Right,
Which is
right,
not available to everybody else. And tech is expensive also,
right.
relatively speaking. So it's just that same level of capability exists everywhere. It's democratized. It's a new world out there, and
Hmm.
there's just a small window, and there's just more opportunity also, I'll say, right? So
Yeah,
I'll,
absolutely.
I'll leave us there.
Yeah, Zico, and what I would like to leave to your audience, like I said, they can get the book,
Yes,
for free. They can get those two books that you're very familiar with as well. They can text the word book to the number 20500, but also they can set an appointment with one of us,
yes, and
and
I'll put those details here.
yeah,
So
and
just
they
share the
and they
links, and I'll put
they
them.
can also text the word MPI, and they'll get the link to book an appointment and learn more as well. So they can do that too.
Yes.
Thank you.
Any other information you would like to share for the audience, and
No,
leave
I
them any
think
last final thoughts, maybe?
last final thoughts. I think thinking outside the box is very important when it comes to your investments. I think a lot of people don't put their financial situation as a priority, and it should. Even from somebody who one of the struggles I had at the beginning being married was finances. And I think I'm not the only one, or we're not the only one. So I think one of the things that I do every week is talk about the finances with my right, and make sure that we're all on the same page, that we're still within our budget. We're not going above our means, and making sure that we're on the alert in case an opportunity comes, and we can deal with that when that comes. So thank you very much. I'm very passionate about what we do, as you can hear. I
Yeah,
hope that came through,
yeah,
but
definitely.
I appreciate the opportunities.
Thank you so much. Thank you so much, Edison. It was a pleasure having you here. You educated us and the audience a lot. I'll definitely put everything in the show notes, and also
Okay.
we'll put it. You had your QR code. Also, we'll make sure that that's there, and people can be in touch with you. That's good. Thank you so much. Have a great day.
Absolutely, Zico. Thanks.
Thank you.